Hello, neighbors. I'm Squealer D, and I am back again. Welcome back to the neighborhood. How are you today, my friends? We are back in the wonderful world of finance, my friends. Let me scoot over a little bit and get us comfortable. Get this mic out of the way. Make sure you can see and hear. I know we've had troubles with that in the past, but it looks like we are good to go. So, my hair is semi-brushed. My coffee is ready. It's a D for Donna. Or dinero, guys, because we're learning about money. Oh, it's kind of hot, just how I like it. Okay, so today we are going to learn about entry and exit points for stocks, and we've talked about them before, but like I said, we're going to talk about a lot of stuff more than you think. So, what we're going to talk about is how to calculate entry and exit points. We're going to talk about this again, guys. We're going to practice this and practice it until we know how to get in and out on a map. So, what we're talking about today is how to find an entry, buy low, and exit, sell high. So what we want to know is on this chart, when we're down here, down low, how do we know to go to buy? Where are our signs when it's high to buy low or to sell? That's what we're working on today. Entry and exit points of a sell. Because in order to sell a stock, you first have to buy it. So, my friends, let us learn how to calculate entry and exit points for stock. This is off of Gorilla Trades, and we haven't read a lot of Gorilla Trades, but I read through this and it has some good information, and we can find this information on others on Investopedia also. I just liked the way that this one was worded. So, here we go. Gorilla Trades. Gorilla in a Suit says, there are only two steps involved in stock trading, buying and selling. Those are the easy parts. What's difficult is knowing exactly when to do them. Your stock entry point and exit strategy need to be aligned to maximize the profit potential. Here are a few approaches to think about when deciding when to jump in and jump off. Calculating entry points. A trade doesn't start until you enter into a position. You buy shares in a certain security, keep an eye on it, and hopefully see it gain in value. When the stock price gets to a comfortable profit margin, you either sell your shares and bank the profits or hold on in hopes profits will rise even further. Many passive investors, the ones who favor a long-term buy and hold strategy, don't worry too much about finding a decent entry point. Many of them simply buy on the spot at going market prices without too much technical analysis. With short-term active traders, it's more complex. They're looking to cash in relatively quickly, selling their shares to earn instant profits, so they have to be a little more strategic and nuanced about finding the right entry point. And this is where we're headed first, guys. Short-term active traders so we can make a bunch of money. Then once we have the bunch of money, become passive investors who buy and hold on a long-term strategy like Warren Buffett. So, pullback, support, and resistance. Looking at a stock's recent share price history gives you an idea of where it's trending. When you're searching for an entry point, you're looking for a spot that indicates momentum is going up but hasn't hit its peak yet. You could probably get an idea of this just by looking at the price history, noticing consecutive periods of consistent growth. But a more reliable, easier approach is to look at the stock's moving average, the MA. Okay, so let's take a look at a stock, see what's trending. This, guys, is the moving average. Right here, this purple line that this is on, that's the moving average. So what did it say to do? It said, look at a stock's recent share price history. When you're searching for an entry point, you're looking for a spot that indicates momentum is going up but hasn't hit its peak yet. Okay, so here we go. We're looking for momentum going up but hasn't hit its peak yet. So like on this third one, the momentum's going up, but it hasn't peaked yet. Or here, the momentum's going up, but it hasn't peaked yet. Or maybe here, The momentum's going up, but it didn't peak yet. Okay, so we found our entry points, guys. Momentum's going up, but it hadn't peaked yet. So like here. Seems easy enough, right? The MA is a calculation of a stock's average price over a given number of time units. 10, 20, 100, and 200 days are especially popular. Your online brokerage stock chart should be easily customized to display the MA you wish. If they aren't, think about finding another brokerage. So if we click on our MA, can we... Indicators, moving average. Look at period. We learned, guys. Yay, we could do 20 days. And there we go. Now we got a 20-day moving average. So, you'll see the stock price as they relate to the moving average. If you found an uptrending stock for which prices are outperforming the MA, look for an occasion when they go down in price closer to the line of the MA or even go below it. This is called a pullback. It's a simple downward correction before prices go back up again. In other words, an entry point. So we can see right here, if we take away this, don't look at this curvy purple line. Just look at the straight, this one. So if we look here, it pulled back and went up. That was the first pullback. And it pulled back again under the moving average here and then went way up. And if we look, it pulled back here and it's still down below the moving average. It went down, down, down below the moving average, down, down, down. It's still below the moving average. But this is Tesla, guys. Remember we said Tesla's going down. I said I think Tesla's going to a price correction. It's at, right now Tesla's at 171, but we think Tesla and Apple are going to go back down to price corrections. Who knows? So if we look at the big moving average, it's below the moving average right now. That's called a pullback. This right here was a pullback and then it went up. Okay, so we found a pullback. Upward trending price lines, especially MAs, are indications of support in the marketplace. Even if the prices dip a little bit from day to day, if they don't fall too far too long, there will still be support. The opposite of this is resistance, which would indicate a possible exit indicator. As long as the support levels remain solid, it's probably a good time to jump in. So when they go down below the line, it's resistance. Okay. Of course, high volume accompanied by a declining stock price means people are selling their shares in droves, especially if you've earned a profit from the stock in this situation. It's likely to cash out. So for me, when this dipped down below this line, down below the resistance line, the pullback, I would have gotten out. Like as soon as it pulled back and started dipping down, I would have pulled out. And the reason being because the 20-day average dipped way down. I probably would have bought right here. When this one dipped, pull back, I would have bought here, and then I would have sold up here. So I probably would have sold. Let me see. Let's look up closer on that one. So I would have bought at this dip right here. As soon as this moving average moved below the other moving average, I would have purchased this. I don't know why. That's just what I would have did. And then they say that's the pullback. It's a good time to enter. And then you buy. And then this decline, that's your pull. That is your exit. When it starts to decline. Because if you buy here, even if you sell here on this decline, you still made $30, 30 ticks a share. So, yeah. Or 30 points, sorry. Ticks are, we're going to learn what ticks and points and pips are tomorrow, guys. So be here tomorrow if you need to learn. The most common words are points, ticks, and pips. And we are going to learn what they are tomorrow in our lesson. So we can use those words like professionals. So, crossover with two moving averages, and that's what we did here. Let's see what they say about that. An especially popular method for determining entry and exit points is monitoring two different sets of moving averages, say a 20-day and a 100-day, and executing on positions when the shorter term crosses the longer one. The longer MA indicates a more stable pattern. Typically, it rises and falls. The rises and falls are very mild. The shorter MA is slightly more subject to volatility. Investors believe that when an upward moving shorter MA crosses over the trajectory of a longer one, it's a sign to enter in the position. Conversely, when the shorter MA crosses downward and goes south, it's time to exit. So, they say when it crosses back up over this way, it'll be time to buy. And when it crosses down, it's time. Okay. So here we go. We got one right here. Here's the 20-day. And here's the 50-day or 100-day. I think ours is 50. It'll work. So when it crosses down right here, they said this is a signal to exit. It crossed down past here. But it's a signal to enter when it comes up. Upward movement. See, it was just a quick pullback. And then you buy. And then you want to sell before it crosses here. And it hasn't crossed. It didn't cross here. These are not signs to buy because it hasn't crossed yet. So when it crosses up again here, that'll be a sign to sell. I meant to buy. When it comes back up here, guys, to this line, it'll be a sign to buy. We'll see. We'll keep watching Tesla to see if it comes up. Not today. It probably won't be today. So, continuation patterns. And we've talked about these before. So, one chart event that investors watch out for, especially in intraday trading, is a continuation pattern. This is a series of up and down price movements immediately following a big vertical movement. They're used to time entry and occasionally exits from a stock position in anticipation of an eventual return to the trajectory. For example, say a stock emerges from a long flat or downward trend with a sudden jump in buying volume and price at the end of a stock market day. The next morning, the stock recedes a little bit, then bumps up mildly, then drops a bit, then goes back up a bit, and maybe goes through another cycle another time or two. This resolve of the stock is called consolidation. Now, you could enter into this stock at some point on the original way up, but you can't be sure the upward trend will continue. And in fact, it doesn't. You'd prefer to wait out the consolidation period until you see signs of continued, sustained momentum. That's the basis of a continuation pattern. Two of the most commonly known patterns are the flag and pennant. The initial stock price jump resembles a flagpole. If you were to draw two lines on top and below the consolidation period, it will look like a flag, or potentially a pennant if the variances are narrower. If, after consolidation, the price eventually crosses the top line of the flag or the nose of the pennant, it may indicate a great time to enter into the stock. It survived a brief period of investor settlement and appears to be headed toward a sustained period of growth. Flag and pennant patterns also work in reverse. If a stock endures a steep vertical drop, there may be a period of consolidation where trading goes up and down. In this scenario, if the stock price drops below the bottom line of the flag, it'd be time to exit. There's no guarantee that continuation patterns will always play out, but especially for finding entry points in bullish stocks, flags and pennants are uncommonly effective. So let's look and see if we can find a pennant. Okay, so here we go. Here we go, guys. Here we go. Here's a flag. You see this long one? And a downward. This is the mobility they were talking about. Up and down, up and down. You don't know if you want to buy. That's like a pennant or a flag going down. Here's another one. A pennant. It goes up. It goes down. So you could buy on this stick of the pennant, but you never know, like they said, when it's going to go. So you might just want to wait. And it did. It went to this volatility and it went here and crossed over. And this is a great entry point. So to be able to notice these two, if I'm right, and these are both pennants or flags, whatever you want to call them, then they did signal an entry and or exit point. Okay. So calculating exit points. Exit strategies can be tricky. Buy and hold investors naturally want to hang on to their shares for as long as possible in hopes that they'll continue to ascend. Day and swing traders make more frequent transactions, hoping to cash in on more modest price movements just before they stabilize or drop off. In a lot of ways, calculating a stock exit point is an entry calculation in reverse. You see a downward trend occurring and look for temporary price increases to get out of before the decline becomes long-term. You see bearish flag and pennant patterns to determine the best time to close a position. But figuring out an exit point is much more complex than buying into a stock. Most investment experts strongly advise setting an exit plan as far enough in advance as one can. Limit orders. What kind of trader, and we are going to hear about this a lot, guys, because we are going to be addicted to limit orders and stop loss orders. Those are our friends for what? Risk management. Throw it in the comments. Risk management. We will all control our emotions and have wonderful risk management. That is how we are going to make money on the stock market. We're going to learn, and then we're going to use good risk management. What kind of trader you are will dictate a lot about what exit strategy you'll employ. But it's a good idea to set a limit order for certain commodities so you can take profits and keep your investments more liquid. A limit order is simply a direction to your brokerage to sell your stock after it reaches a certain higher price point. If you buy 5 shares at $100, you might set a limit order to sell all of them as soon as the stock price hits $200. And if and when it does, your brokerage turns your limit order to a market order and returns the profit to your account. You've made $500. There's no real tried and true method for calculating the right point for a limit order, since the majority of stocks on the market appreciate over time. A stop loss order works just like a limit order, but for stocks that are headed for a loss. You direct your brokerage to sell your shares after they've declined to a certain point, so you can cut your losses. Every position you own should have a stop loss order attached to it, even the value stocks. It's a form of protection against drastic losses. If you've invested in a position at $50, you might decide to set a stop loss order when it declines by $10 or 20% of the value. With more expensive value stocks, you may set narrower stop loss limits, 5% for example. A typical strategy is to keep raising your stop loss limits on stocks that are consistently rising in value. Once the stop loss limit passes your entry price, you've guaranteed that no matter when the sell executes, you'll break even. Continue to raise your stop loss limit as the price goes up, guarantees you'll turn a profit when it sells. There we go, guys. We did it. So, we need to look for flags, and we need to look for the moving average crossing over. See how easy that was, guys? With 20 minutes to read that, to understand it, and now we can go and take a look at the news. So, Tesla. Let us look. What's on the news page today? Inflation, Disney, and the debt ceiling. What to know this week. Got a picture. Joe Byron. This is by Josh Schaefer. Alrighty, Josh, what do you got to say about the week? Key inflation data, quarterly results from Disney, and an increasingly contentious debate over the looming national debt limit await investors in the week ahead. For investors, Wednesday morning's Consumer Price Index report for April will be the week's biggest release, with markets looking for signs of a further slowdown in consumer prices. Wall Street expects headline CPI, which includes the price of food and energy, rose 5% over last year in April, which would match the annual increase seen in March. Prices are set to rise 0.4% on a month-over-month basis. On a core basis, which strips out the food and energy prices, inflation is forecast to rise 5.5% over last year in April, a slowdown from the 5.6% increase seen in March. Monthly core price increases are expected to clock in at 0.4%. On Tuesday, President Biden is expected to meet with the Speaker of the House, Kevin McCarthy, and other top congressional leaders as worries intensify that the U.S. will default on its date as early as June 1st. Historically, uncertainty surrounding the debt ceiling has weighed on stocks. Elsewhere in Washington, you know they raised the debt ceiling 3 times when Donald Trump was president. 3 times. Elsewhere in Washington, a hearing entitled Federal Responses to Recent Bank Failure is expected for Wednesday. The hearing comes as pressure mounts on several regional banks that have seen their stock price deteriorate and are reportedly looking for buyers. Disney will headline another busy week. I guess, guys, who do you think the buyer is going to be on these banks? Let's say JP Morgan. Disney will headline another busy week of corporate earnings with Airbnb, Rivian, and Warren Buffett's favorite Occidental Petroleum, all set to report. A rally led by strong earnings from Apple pushed the Nasdaq more than 2% higher on Friday and put the tech index on even footing for the week. This rally, however, wasn't enough to push the major indexes higher for the week, with the S&P 500 and Dow Jones Industrial Average both falling after the Federal Reserve raised rates last week in what Wall Street called a hawkish pause that left open the possibility of more rate hikes. So these are the S&P 500, guys. So it's just the indexes of the markets. Remember we learned what they were? This one, guys. What's the S&P 500? Global shares indexes. Wait. What's the historical data? I never even checked out it tells you they're open, they're high. Oh, guys, that's so useful. You literally learn something new every single day that you try to learn the stock market, guys. Historical data shows you every single day's open, high, low, close, and the volume. This is the volume of what was traded that day. You can change it. Oh my God. Wow. Yahoo Finance, you're real cool. So it shows you here, but then when you go to Mang. Oh, and people talk about it here? Oh, guys, Yahoo Finance has conversations where we could talk. Oh my gosh. Let's see what Jason has to say. When it comes to investing, we want our money to grow with the highest rate of return and the lowest risk possible. While there are no shortcut to getting rich, but there are smart way to go about it. Hey, Jason told us, use your brain, people. This is the most important comment from today. Let it think in. Oh. Brandon gave us the most important comment from today, guys. Are you ready? Take this in mind, people. It's the most important comment from today. If we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched. The costs, the employment costs in particular, will be much higher potentially. So from risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon. Oh, he didn't say this, guys. He took this out of... When the feds raised the rates, they said that. So, who's to say they tightened enough? Or they loosened? I don't know, man. Let's see what they said back to old Brandon. They used their tools to create this non-transitory inflation in the first place. They sure did. You're right, Matthew. Danny said, if the market crashes, they'll pull out the printing machine as always. But if it goes up, they have control of power over the people. These people ain't lying. Yep, the printer and Bitcoin. He said Bitcoin. Number one team. They don't even have to print money anymore. They just digitally type it in. They do this. Beep, boop, beep, boop, beep, boop, beep, boop, beep, boop, as they're typing into their keyboard. Come on, guys, get in the 20th get in the 21st century. It's 2023, brother Mings. Thanks for the spam. Labor inflation is a huge problem. Most people here don't work. Okay, quick. His name is William Chat, I bet you. We'll chat. Labor inflation is a huge problem. Most people here don't work. That's my eyes, guys, looking all wonky. Talking about most people don't work when most companies don't want to pay us. It's not a work problem, guys. People are working. It's nobody wants to pay. Who in their right mind is going to be a young person and they have the option of going and working for money or not working for money? Do you really think that they're going to go wipe butts at a hospital for $18 an hour when they can stay home and do things on the internet like, I don't know, you can sell things on the internet. You could play video games on the internet. You could do stock market on the internet. There's a million things you could do on the internet to make $18 an hour. You could go to thrift stores, buy stuff, and sell them on eBay and make more than $18 an hour. So tell me, people, everybody wants to say this. People don't want to work. They don't want to work. They do want to work, but they also want to make money. Money. And people like this that think labor inflation is a huge problem. Labor inflation is not a huge problem. Labor inflation is a huge problem for rich people that don't want to pay more. We figured out last time, guys, that companies are paying less than 1% to their hardest workers. I have a friend who works for less than 1% for a company, and they do all the hard work, guys. They drive a truck and they do all the hard work and the company makes all the money. They got 25 truck drivers. The truck drivers do all the hard work. It's a trucking company. But they make less than 1% of what the company makes. The company makes millions. These people are making less than $100,000 a year. Now tell me why a young person would want to come into the workforce and work for less than $100,000 a year, hard work every single day, sometimes 60 hours a week for $100,000 a year, when they could sit at home and not go out and bust their body to bits. You guys, hard labor busts your body to bits. It busts it to bits. Your little legs and your arms are all your joints are shit. They're crapped. It's not that people don't want to work. People want to get paid. And old Quick here, he doesn't want to pay because you know what he wants to do? He wants to get rich. And that is the problem in our country. The problem is we are a bunch of poor people. Our country is filled with 99% poor people. And we all think one day we're going to get rich. We all think one day we're going to be rich people. And so we don't want to change the rules for rich people because when we get rich, we want to keep our money and we want to be able to pay low wages and we want to be rich. So we don't change our rules for rich people because we are all poor people who think one day we're going to be rich. We call ourselves temporarily poor. One day we're going to be rich. We're not going to be rich, guys. We're not. None of us. None of us are going to be Elon Musk. We could do this every single day for the rest of our lives, and none of us, I promise you, are going to be Elon Musk unless you marry him. If you marry Elon Musk, you might be a Musk, but you're not going to be Elon Musk. You are not going to be Jeff Bezos unless you marry one of them. And your chances of marrying Elon Musk or Jeff Bezos is pretty thin, guys. It's pretty freaking thin. Freaking thin. So stop telling people they don't want to work. People don't want to not work. They want to make money. I'm sure that there's 1% of us. Out of that 99%, I'm sure there's 1% that want to sit around and get welfare. I'm sure that there are. But guess what? That's 1 freaking percent. Just like gun owners, guys. I'm sure that 99% of gun owners don't want to go shoot people up, right? It's 1%. 1% of gun owners are crazy and they want to go shoot crap up. You can't blame everybody, but you have to blame them. You can't just say just because it's a little bit of people that it doesn't happen. It does happen. And there are people that abuse welfare. But on the majority of people have multiple jobs. The majority of people I know have held multiple jobs this year. So it's not that they don't want to work. They don't want to wear their body down for a company who cares about labor inflation. Guys, we went from paying $2 in gas to paying $4 in gas, and they're worried about how much they pay us because that's how they stay quick. That's how Quick stays rich in his mind. He doesn't pay you. And so you do all this work and they give you crap pennies for it. And then they say you don't want to work. That's not the truth in America, guys. Americans don't want to be slaves. That's the truth. You're wrong, Quick. That's why you didn't use your real name. Jason here. Jason used his real name. Now I can't get him off. Oh, Jack. Sorry, Jack. Jack said no. I like the fact these same people are cheering the advent of AI. Millions of jobs will be destroyed, and the thing might just take over. Yeah, that's a good idea to unleash this monster on the world. After all, things are so stable now. Brad, you ain't wrong. Brad talking about AI, guys. AI already took millions of jobs. AI already took all of the jobs where you search for shit. You look for something on the internet, that's AI's job. You edit something, that's AI's job. Someone said you're a bad person. Who are they talking to? Way up here. Brandon. Why she tell Brandon he's a bad person? What does this gal know that we don't? Somebody down-thumbed her. Why she tell him he's a bad person for saying this quote? If we're to over-tighten, I don't know. I don't know why she called him a bad person. This is funny. Brandon said, Brandon's on here a lot. Look at this. Oh, that's why. Maybe she know he a bad person. He's on here a lot. The markets have created their own dovish Fed narrative 5 times since all this started. Every time they've been wrong and the markets have dropped to new lows. We're about to witness the 6th occurrence. Nothing meaningful has happened with the inflation fight. The numbers are still elevated, and it's far too early for the Fed to pause or pivot. Dose of reality is incoming. Someone gonna tell him he's a bad guy again? That's funny. Ha! Funny guys. Well, now we know they have conversations, guys. That is very interesting. So, let us see. Watch lists. What do we got as a watch list, guys? Nothing. Small cap stocks. Let's check out small cap. What's small cap stocks? Like Fisker. Like the scissors? Fisker. SunPower Corp. So this is a mover. Fisker. Let's check it out. You guys see why I said it was a mover? 4.26 change today. It's only 27 cents, but you got to remember it's a low price stock. It's under $10. So they move fast, but little change. So it's not going to say $5 change because that would be like a 20,000% increase. So one day, look at it. Look at it grow. There's a moving average. It's way up. It crossed down right here, crossed back up. That's an entry point, guys. Where it crossed up, entry point. And look, you guys, this is an entry point. This happened on 5/8. So what was that? Today at 10:50 a.m. You guys see that? No. Oh, different time in the market. Duh. Okay, so it's 10 o'clock over there. I guess this is Eastern time. We have the time set up for over on the East Coast as of 12:21, and it's 9. Yeah. So this is Eastern time. Okay. So at 10:51 Eastern time, we saw it cross over, guys. Or at 10:41, it crossed over. Remember, they said if the moving average comes up, the 20-day comes up over the 50-day, then that is a sign to get in. If we would have got in right here, it was at 620. Right now, if we were to sell it, it's at 644. We would have made 20 cents per stock. Just right now. And this is in 2 hours. And it's a low penny stock. So if we would have got in, you could have made 20 cents per share. Just a little one, guys, but a little bit of money and a little bit in. We can grow it slowly. We don't have to grow it fast. You do not have to grow it by hundreds of dollars every day. If you grow by $18 one day, that's 18 more dollars you get to play with the next day and invest into your capital so you get to grow your money. So, look at us. We noticed an entrance point here. It went up and it's on a move. Let's see. Got any flags? It looks like a flagpole here, down. That's a pennant, right? And that would be a sign to sell. So if you see the pennant drop, I would sell. And if you would have sold here, you'd have been better because it went down real low. So how fun, guys. We learned 2 new things today. Let's look. What do we got? What do we got for here? Let's the indicators. Do they have a conversation on every one of them? Like, yes. Oh my goodness. There's 50,000 comments on Fiskars. This is great. Seems we're back. This guy said this in October. Oh, these are old. Oh, Ming. Oh, they go backwards. No, we want to start. You guys, I'm learning how to use this. Let the long-awaited short squeeze again. $7 by close today. This guy said it's going to be $7 by close today. You guys think he's going to be right? Happy birthday to me. Today, my birthday. Happy birthday, Emilio. In my opinion, Fisker has changed the dynamics of its stock price movement. For the past 2 years, the company has not made any significant progress with its pre-revenue status, resulting in stagnant investor interest. However, with the current shift in times, new money is likely to start pouring in, making it harder for short sellers to move the stock with ease and little volume. This trend is similar to what Tesla experienced in the past. I hope history repeats itself with Fisker. Scared money makes no money. I seen 100 of you during the Tesla days. Good luck. I wonder what he meant. Imagine what happens if they announce a potential third delivery. So the third delivery would be more stocks, right? So then that would mean it would go up again. But scared money makes no money. But this guy wasn't saying anything scared. He was just saying imagine. I don't know. I kind of see these traders as they're kind of mean, guys. If you become a trader, don't be mean like these people in the comments. Maybe it's just comment people are mean. My average is 5. It means it'll be a good day. Oh, look, Scurf. Best Monday you have in a while. Bring us some good luck tomorrow morning, too. Oh, they're being nice. Shot at past point 40. You the man. Keep it going. Welcome to the party. Today is buy. The rumor. Tomorrow is sell on the news. Uh-oh, Michael. Why you gotta come be mean, Michael? Poor Bev. Bev said to buy the rumor and sell the news. And Michael told him, throw in the towel. It's okay, Bev. You don't throw in the towel. You may be right. It will be interesting to see what production numbers he forecasts now. Likely down from the 42K. Read in the MAGA ER transcript that they're going to ramp down BMW production in Q3 and heavy ramp up Ocean Q through the end of the year. Not sure how much Magna can do with the heavy means. Doubt 42K reasonable, but who knows? May wait to lower guidance later in the year and hold steady for now. The doctor. Dang, they're mean. Good thing no one hired this guy. They need about $5 billion to continue the cash of about $70 million is not enough. Scurf's up here. I seen him. Scurf. He posted. This guy asked where Scurf is. Where's Scurf? First Monday after retirement. He's sleeping till noon? In the water at 5:15. Oh, he surfs. Scurf seems like a nice guy. Michael, not so much. When you come to Cali, I'll show you the best way to kill time. I want to go to Cali and learn the best way to kill time. I need a whole lot more green to pull me out of the baggy crowd. Not sure I get out of this one without some major pain. Well, see, I guess. I'm in with you. Fidelity's offering $34.75 to borrow. I love a 2-for-1 trade. 625 and I reverse it. Head fake. Let's confirm the close, baggies. Go, baggies. A new weekly high, 642. Maybe on to things. Doctor, thanks for the heads up on Jonas. Oh, that was the same guy, and I used two different voices. Man, these guys talk in here, and then they talk about the stocks because they don't got nobody else to talk to, I guess. They should come into our group and help us and talk to us. Look, somebody's typing right now. They need to come into our group and talk with us, guys. They're talking about each one of these. Each one of the tickers has a conversation of lots of people talking. Oh, my word. This is better than Reddit, guys. This is like the Reddit of finance. Who else should we look for? Oh, it's a gaming platform, and it's down a lot. Riot platforms. Let's finish our coffee before it gets cold. Okay, so let's look at Riot real quick before we go today. Let's see what we think, and then we'll read. Ooh, look at this. It's down, 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 down. Oh. It's moving back up. Guys, we should go and buy some of these just to see what happens. Let's see what they say. Because Riot just did look, we learned this. This is an entry point. The big average got crossed by the little average, the 20-day average moving up. This means it's on its way up. Let's see what the people in the comments say. Conversations. Search by the newest. Joel says, it's funny what a 1,000-point drop in Bitcoin does to this stock. So Bitcoin went down and Riot went up. Is that what happened? I wonder how much Riot had to pay for Motley Fool to publish this article. You could clearly tell they helped write it. Has all their talking points verbatim. And they seem to nicely overlook how the company has never made money and lost $500 million last year. And issues new dilutive shares year after year after year after year. So maybe they're not somebody you should have long-term, AC. Maybe you should just buy like a pump and dump. You buy them and you sell them when they go up and down. Day trading. Maybe they're not year after years, Any predictions after earnings today? The Bitcoin mining field is crowded, but there's one clear-cut leader screaming, buy. These pumpers will never change. They are number 2 in the mining space. However, it all boils down to operating costs. I have not gone through to comment about it. Overall, I would tilt towards it pop up in 20% today. In the first hour, traded 50% of its daily volume and negative 10%, not a good sign. I bought $10 calls. I hope that I am wrong. There's a demand for mining right now, but not sure how good their operations are. Oh, is Riot I thought he was a gaming. Let's see who they are. Riot platforms. Oh, didn't spell that right, did I? It's a Bitcoin. Oh, Riot? I thought it was gaming. It's Bitcoin mining. So Bitcoins go down and Riot went up? Weird. But Bitcoin is like, goes up and down and up and down and up and down. Bitcoin is really cyclic. Like, where's their Bitcoin? Crypto. Crypto's got news too. Can we talk on crypto? Like, Bitcoin, guys, is down. Down. Everybody's down today. Hex is up. It's only 5 cents. Less than a cent. What else is? Anything that's not down? Everything's down. Weird. That is weird. I wonder if you go to Bitcoin, if they have a conversation. They do. Let's see what these Bitcoin people sound like. I listen to Bitcoin people on Facebook, and they are hilarious. Bitcoin is not Binance. Bitcoin will be skyrocketing the moon while exchanges and banks fall off the cliffs. That's what Lotta said. Steven said, the difference between First Republic Bank and Binance is that Binance has no auditors. $4.9 billion in outflow was the problem at Binance. It looks like they survived this latest run. But one of these days, Binance won't be so lucky and will shut down like FTX. Well, Lotta says, go to Binance site. You can post all your nonsense there because it deserves it. Man, these people are so mean to each other. And they're always in the comments. Look at, they're having year-long conversations. Someone said a digital turd is all it is. Can't even buy a candy bar at Walmart with it. What a joke. John, I came here for your comment. You talking about these Bitcoin people that have made billions and you're calling it a digital turd. Like they could buy every one of your digital turds with their Bitcoin money, John. Bitcoin's real. A Bitcoin was worth less than a candy bar years ago. Yet candy bar is not worth as much as Bitcoin now. Lotta. Oh, Lotta. Oh, you're a lot of fun, ain't you? When fiats are printed like toilet papers, nothing good will come of it. Bitcoin has shown what sound money is having finite supply at all costs. I don't think Lotta knows what she's talking about. I like it when people talk about Bitcoin. It really makes me laugh. Some people are staunch supporters of Bitcoin, and some people are staunch against it, like it's not even real. But it's real. It's here, guys. It has a whole little tab on Yahoo Finance. Look at this. Crypto. It's got his own little tab. He's got a lot of different Bitcoins, a lot of different coins. And I'm sure they're not all called Bitcoins. They're called crypto coins. But it's got a lot of them. This sure do got a lot of volume. 16 billion, 9 billion, 27 billion, 621 million. Like, this is a lot of volume, guys. Got 2.75 billion. I'm pretty sure that Bitcoin's going to, or all these coins, crypto is, we're going to play with crypto, guys. The rich people want to play with crypto, so we're going to play with crypto. It's not fake. I saw a crypto ATM. So I guess you could buy a candy bar with your crypto. And like I said, old Bob or whatever his name was, didn't even know what he was talking about. But that is it for today, guys. We did about an hour, 48 minutes. We learned about entry and exit points. We saw some real life entry and exit points. We learned that Yahoo Finance has a conversations tab, so we can go and watch the weirdos talk and see what their opinion is about stocks. And what else did we learn today? Oh, we learned how to do moving averages on the, look, we pick a ticker, any ticker, pick Riot, that's fine. You pick Riot, you go over here, and you can put indicators. Look how easy this indicator is. We can throw a MACD up there. You want a MACD? I'll throw a MACD. Look at this MACD. Where'd it go? I didn't throw a MACD. I don't know where the heck the MACD line went, guys. Oh, down here. It's down here, guys. There we go. Look. Indicators, guys. We learned so much today. I will see you tomorrow. Like I told you, tomorrow we are going to learn what ticks and pips and points are. Points, pips, and ticks. Whatever the words are, we're learning them tomorrow, guys. Because if we don't know, what are we gonna do when they say my stock fell by 4 points and we don't even know what a point is? Or what if they say you could get 4 pips? What the heck's a pip? I don't know. You don't know. So tomorrow, come by and we will learn what a pip is. If you missed any of our learning, guys, this is day 26. We are rocking and rolling all the way to day 100, maybe day 200, maybe day 500, and we will be like these guys in the conversations talking about that is not real, guys. Who knows what we'll be in 100 days. If you need to get caught up, head to my playlist. I have one called Stock Market Learning, and it has all of the previous day's lessons. They're really interesting. They're probably even better than today's. Go and check them out. Watch them. Listen to them. You could even listen to them in fast forward, like fasten my voice up. And then you could listen to them even quicker so that you get them all over with in like 15 to 30 minutes, quick style. And then you learn everything that we learned up until now. We keep learning, and you become a stock market genius. And then you repay me by buying me a nice coffee. And you say, this gal, Squealer D, taught me the stock market, and we learned together, and I bought her a coffee. And then that'll be it, and we'll be friends. We won't be arguing like the people in the Yahoo Finance comments, though, because we are not going to be mean to each other, guys. No reason to be mean about the stock market. It's people gaining and losing money. There's nothing to be mean about. So I will see you all tomorrow. Same time, same place. Come learn about pips. Have a great day. And that's it.